India's exporters have done it again, beating expectations in a month that was supposed to be their toughest this year. Despite steep new US tariffs as high as 50% on several Indian goods, exports rose 6.7% year-on-year in September. That's $36.38 billion, up from $34.1 billion last year. It's the first full month since the US duties kicked in on August 27, and yet Indian shipments, especially electronics, engineering goods, and pharmaceuticals, did not just hold steady, they grew. Let's start with what happened. The United States, India's single largest export market, accounting for nearly 17% of its goods, slapped tariffs up to 50% on a wide range of Indian products: textiles, jewelry, machinery, pharmaceuticals, and even some agricultural goods. The impact was immediate. Shipments to the US dropped almost 12%, falling from $6.87 billion in August to just $5.47 billion in September. Labor-intensive sectors were hit the hardest. Ready-made garments down 10%, cotton and handloom goods down 11.7%. And yet, India's overall exports did not collapse. They grew. How? Because exporters moved fast and India diversified their trade strategy. Shipments to China, Brazil, and the UAE surged. Trade with the Netherlands, Italy, and the UK also picked up, driven by demand for engineering goods, marine products, and pharmaceuticals. In short, exporters went where the tariffs did not. CRISIL ratings say that India's non-US exports grew 10.9% year-on-year, outpacing the August figure. Without that diversification, the fall in US shipments would have dragged total exports into negative territory. Some exporters even front-loaded shipments, rushing goods out before the tariff deadlines took full effect. That partly explains the sharp sequential rise from $35.1 billion in August to $36.4 billion in September. India's total goods and services exports for the month touched $67.2 billion, while imports hit $83.8 billion. That pushed the trade deficit to a 13-month high. And the bad news is, imports are surging even faster. Gold imports itself nearly doubled from $4.6 billion in August to $9.6 billion in September. The result? A ballooning trade deficit of $32.15 billion, the highest since August last year. Economists warn that the September boost may be temporary. Some call it a front-loaded surge, a short-term rise driven by exporters racing ahead of tariff deadlines. However, experts do say that India's ongoing trade talks with the European Union could be a much-needed cushion. That deal, if signed by the end of the year, would open up new markets for Indian textiles, leather, and machinery, and could help offset US tariff losses. Meanwhile, India and the US are inching closer to a trade deal that could slash tariffs on select imports to around 15 to 16%, according to recent reports. The Foreign Ministry and the Commerce Ministry emphasizes that India is proactively engaged. The Indian delegation is currently in Washington discussing deeper cooperation on energy, including talks to import more US oil and gas instead of Russia if the pricing works. The government is also urging exporters to expand aggressively into Africa, Southeast Asia, and Latin America, markets that have quietly become India's fastest growing trade partners. The message from September's data is clear. India's export base is broadening. The US remains vital, but it's no longer the only game in town. The challenge now is sustaining that momentum. If global demand slows and tariffs persist, India will need to boost productivity and finalize pending trade pacts fast. But for now, Indian exporters have done something quite remarkable. They've defied a global tariff shock and still posted growth. We will keep tracking the story. Stay tuned to Mint.